Okay, everybody, it's me, Gregory Mannarino. It is one of those days for me, and we'll talk about that in just a minute. Anyway, so it is Thursday, June 24th, 2021. Well, it may not be a great day for me, and I'll tell you why in just a moment, but it was a great day for the stock market. Stocks higher across the board. Dow Jones Industrial Average put on like over 300 points. A new all-time record high for the S&P 500. An all-new record high for the NASDAQ. Imagine how surprised I am. No, absolutely not. I explained to you that this trend will continue. There's no stopping it. And the worse the economic news is, again, let's use today as an example. Another 411,000 people today applied for first-time unemployment benefits. Layoffs continue to move higher. Capital goods orders actually reversed lower. Durable goods orders missed the mark. It's always the same. It's always unexpected, not to you and me, and it's always the same. And it's enough to continue to push the stock market higher and higher and freaking higher. See, this is the kind of environment that, again, it's engineered and the market loves. The market loves this. It understands, just as I do, just as you do, that the easy money, and that's all that is supporting the market. Nothing else. Again, we already have an economy in free fall with debts and deficits hyper-ballooning, debt to GDP ratio. I mean, it's just astronomical and going to get a lot worse here. Nothing is growing. There is no economy growing. It's all debt that's growing on an exponential scale. So when you get continual bad economic news and then in the media that's trying to spin it that, oh, it's okay. No, it's all the Fed. The Fed's buying it all. And that's where the market is going to continue higher. Again, there are a lot of people out here calling for market tops. There was some guy out on Greg Hunter's show recently, market top, it's going down. We've hit record high, record high, record high since that time. Ignore these kinds of people, okay? Other people calling for market crashes, they don't understand the fundamental driver of the markets. It's not earnings. It's not PE ratios. It's not forward guidance. Nothing. It's the Fed, and that's who it is. There's just nowhere else to look. And this mechanism is going to continue the way it is. This environment is twisted beyond twisted. And again, that's just the way it's going to go. Let us talk about a few other things today. Gold and silver fell under pressure today a little bit. It's more risk on. I think that's probably the reason. I mean, risk on meaning cash going into equities. Cryptocurrencies made a nice rebound today. It is not a dead cat bounce. This is a lot of buying here. They are volatile. People expect volatility. If there's one thing that we have all learned, I guess, with regard to cryptocurrencies, they have insane swings higher and lower. But longer term, my perspective, I'm actually more bullish now than I have been in a very long time with regard to the crypto space. So that should give you an idea of where I believe this is all going here in this environment of complete and utter total sickness. The dollar today, flat. Crude oil, of course, bid higher, over $73 a barrel. 10-year yield, stable. That's the entire situation where we are at right now. I do want to talk about a few things with you. So we heard today again from the Federal Reserve, actually from Fed President William Dudley. William Dudley. Yeah. This is what he said, okay? The Federal Reserve's interest rate target is obsolete. Now, he kind of sounds like, the Lex Luthor of the Federal Reserve, Neil Kashkari talking about the dot plot, how it's useless. That's exactly what he said. This is just a big fat duh here. The Fed is concerned with one thing, and that is inflating and creating inflation. All the talk to the contrary is nonsense. I mean, right out of Fed Chair Powell Yellowstain, his mouth, he's not concerned. This is what he said. He's not concerned about inflation. He's more concerned that people aren't getting vaxxed. He wants more people to get vaxxed. He thinks that's a greater concern than inflation, for which he is not concerned. As a matter of fact, it's pretty insane. If you recall, yesterday, out of their own mouth, out of the Federal Reserve's own mouth, they're admitting that this transitory, temporary inflation, well, it may last longer than they expect. So it's really not so temporary, is it? No, it's not temporary, and it's about to get worse. Let me ask you, while we're on the topic, do you believe, really, that all of a sudden, by some miracle, that inflation is just going to go away? It's just going to vanish? Do you really think that is about to happen? Or do you believe, like I believe, that the Fed has not yet begun to inflate? And if the Fed is going to continue to inflate and buy increasing amounts of assets, forget about tapering, you know what's going to happen. Again, let's talk economics 101, okay? The Federal Reserve has been on a money creation binge, unlike that has ever been seen in the history of the world. It's astronomical. Not only is the Federal Reserve printing cash out of thin air to buy everything in sight, they're issuing and they're giving dollars, funneling dollars around the world to central banks around the world who are buying assets with dollars, not their own currency, with dollars. Okay, you're not supposed to know that. This is all, off balance sheet stuff here, but we all know the Fed has two balance sheets. The one we're allowed to see, which has now crossed over $8 trillion and going much, much higher, probably doubling within a very short period of time. And then the other balance sheet, which is where they do all their, other work, okay, funneling dollars around the world, payoffs, everything else that they have to do. Do you understand? So again, nothing is what it seems in this environment. I think you are well aware of that by now. Again, going back to my question, do you believe the Federal Reserve's narrative that this is transitory or temporary, even though they just said yesterday, well, it's going to persist longer than they expect? Can't make this stuff up. This is by design, people. This is by design. Anyone who doesn't understand that is living in la la land, and I know that's not you. You understand clearly what's going on here, people. And this is why I have said repeatedly over and over and over again to bet against this debt. Become your own central bank. Hold physical assets, gold, silver, anti-debt units. Yes, that includes cryptocurrencies. And be on the long side of this market. Look, I know this to be true, that there are a lot of you out here who are betting against the market, believing it's going to fall, believing it's going to crater, because again, technically and fundamentally, the market makes no sense. It's and it should not be anywhere near where it is, but it's the Fed. The Fed is providing the heroin for the market to be on a heroin high from here until eternity. It's not going to stop until it does. And when it does, we already know the biggest clue. Okay, what's the clue here? What's the big sign as to when the stock market is actually going to crash or melt down? See, look, again, there's a lot of guys out here on some pretty big shows talking about market tops and market crashes. But what they're not explaining to you is the entire stock market itself is a derivative of what's happening in the debt market. The real crash, the real market implosion is going to occur when we have a meltdown in the debt market. The debt market is supporting every bubble around us, and there's multiple bubbles to the upside and inverse bubbles. You know that if you've been following this blog. So when you hear, if you're watching a particular show with a particular guest out there, let's say for example, who's talking about a market top or a market crash, what are they gauging that from? Being that you and I clearly understand it's the debt market that's supporting everything. So the implosion will occur in the debt market first. When you see the 10-year yield rising at a very fast pace, uncontrolled, that's the top. That's when we get the crash. Until that point, the stock market's going not just higher, but much higher. You understand? I really hope you understand this. And that's the biggest clue you're going to get from anybody who understands this market and how it works. It's the debt market. It's not this freak show stock market. It's the Frankenstein debt market that's supporting everything because the Fed's buying all the debt. They're issuing debt through one door, buying it through another door. That's their inflation creation machine. This is why they're not concerned. The Fed is only concerned about keeping the market in a hyper bubble until they're ready to pull the plug. And when they do, they're going to pull the plug and the debt market is going to implode. Implode. A debt market implosion on a scale that no one's going to believe, because that's the setup here. This is all by design. Anyway, let me tell you why I started this video off kind of in telling you that I didn't have a good day. I just found out literally after putting out a message in my newsletter about the July 4th party. Well, the venue canceled on us. The venue just canceled on us, and we're freaking out over here. Okay, we're trying to figure out a new venue within a relatively short period of time. So me, a couple of people right now, we're working on setting up a new venue for July 4th. So the venue right now, unless they work something out for us over at the West End Lake Las Vegas, hopefully they're going to accommodate us, because the venue that we had is no longer available. I'm not even sure the specifics. This literally just happened. So look, here's the worst case scenario. I know a lot of you probably don't even care about the venue, and I just want to meet you. So no matter what happens, we're going to get a place to gather all of us, whether it's in one of these new casinos or something. We will meet. I would love to have it in a venue somewhere, but I don't think that's really the most important thing. But I will keep you on top of this. And if you are a subscriber to my newsletter, I strongly advise you to subscribe to my newsletter. It's 100% free. I send out all kinds of stuff there. There is a link in the description of this video to my free newsletter. And I will send out updates over the weekend or maybe even later today about a venue. Maybe we'll get this situation clarified today. No matter what, you and I, we're going to meet. Okay, I can promise you that. I really want to meet all of you. One more announcement. This video right now is my last video of the week. That's right. I will not be doing a video tomorrow, either in the morning or at night. So don't be surprised when you don't see me, but you will see me on Sunday for my Markets A Look Ahead. There's just no way I can get a video done tomorrow. I apologize for that. I haven't missed a day, I don't know, probably in a few years. So I hope you can understand why I will not be doing a video blog tomorrow. So people, look, this video today, critical, very important. I think you understand this. I explained to you where the implosion is going to occur and how it's going to happen. Again, this is the Fed. At one point, the Fed is going to allow the debt market to implode. This is going to be, again, by design, no accident. When the debt market implodes, you're going to see a spike in the 10-year yield. In fact, the whole entire yield curve is going to go parabolic. That is going to put an enormous amount of pressure on the stock market, which will sell off like you have no idea. And there's the crash. So ignore people like on Greg Hunter's show telling you market tops and market crashes. Greg Hunter, unfortunately, lost the best analyst he could possibly have had on his show. We don't see it eye to eye anymore, unfortunately. And a lot of it had to do with the election. It's very sad. Anyway, he complains about people not being able to deal with life. And I think, unfortunately, he's one of them himself. And I would help the guy out. I really would. If he got in contact with me, because I tried to fix it with Greg many times. He doesn't want anything to do with it anymore. It's very sad. If Greg had asked me to help him out, I know he got kicked off of YouTube. I would do it because I'm a nice guy, and I wouldn't even hold a grudge. I'm not that kind of person. Anyway, people, look, with that said, I'm going to leave you off with my favorite 3 things, being that this is kind of like a Friday. You ready? Love each other, care about each other, be charitable. Listen to this video twice. I covered a lot of important things here. please share this video. Get it out as far and wide as possible. Right now, you know what you should be looking for when this market implodes. It's not the stock market. It's the debt market bubble, hyper bubble, that is supporting everything. That's supporting the stock market. And the Fed is going to continue to inflate that to keep the market inflated. So watch the debt market. I can't tell you how many times I've said that. Okay, watch the debt market. Watch the debt market. The debt market is where everything derives value from. The stock market, it can be considered a derivative of the debt market. So that's how it works. You understand? All right. Love you a lot. I will see you on Sunday. Please subscribe to my free newsletter. Link in the description of this video. I will blast out a newsletter when I find out, again, if we fix this issue with the venue or what's going to happen. I will keep you on top, but please allow me to keep in contact with you via my newsletter. Again, link in the description of this video. I will see all of you Sunday. I'm out of here.